Get to our next guest. He thinks the rally will broaden beyond big tech and AI heading into next year, into year end, I should say. Let's bring in Dan Niles of Niles Investment Management. Dan, always great to see you.
Good to see you too, Melissa.
So where specifically are you looking then? If it's not big tech and it's not AI, because it seems unimaginable to look beyond those areas.
I know it's AI all the time these days, right? I think that's part of the problem. It's AI all the time, and I think part of this is FOMO, and it's also underperforming versus your index. If you're a big portfolio manager, and people don't talk about this, you're judged against your benchmark. And when your benchmark keeps concentrating down into fewer and fewer names, you're sort of stuck, or you're stuck chasing it if you don't own enough Microsoft and Apple and NVIDIA. And so that just makes it worse. But at some point, it comes down to earnings. And guess what? In about 2 weeks, we're going to start 3 weeks, I guess, we're going to start having these companies start to report numbers. And what we saw, which is easy to forget because you talk about the market hitting new all-time record highs and all the rest of it, is you've had some very big companies miss numbers. And I'm talking Salesforce, Workday, ServiceNow, MongoDB. So companies that report off quarter that reported their April results, those companies all came out and had issues. And these were some of the darlings, over the last 5, arguably 10 years, where software is eating the world, et cetera, and the demand for what they offer is insatiable, and all of a sudden the numbers are coming down. And so the thing you have to ask yourself is, you've spent a lot on AI. Every company has to say AI 50 to 100 times on their conference calls. And by the way, those 4 companies did. But now you've got to show if their results and the spend that you've had about 50 billion or so, let's say last year on AI, and the revenues you've generated, which is about 3 billion, according to Sequoia, which by the way was the early VC investor in NVIDIA in 1993 when that stock was valued at less than $15 million. They put something out talking about this. So I think in a few weeks, we're going to come to a Jesus moment. And I think that's when the broadening out starts, because not every company is NVIDIA, and it's a very short list of names that are having estimates go up. Their stocks might be going up, but the numbers aren't necessarily going higher. And so I think that's the trigger, which is earnings.
For all those SaaS names that you mentioned, Dan, those results and the commentary about where their customers have gone and what they've been doing seems to underscore this notion that all the oxygen in the room is going to AI spend. So you think that already in a few weeks, that cycle is going to start to crack? Because that seems like a very short amount of time for companies to say, I'm going to spend on AI. Oh, but hold on, I need to figure out the ROI.
Well, but that's my point, right? Is that you have an Amazon Web Services or Microsoft Azure or Google Cloud. They have companies coming to them and putting workloads on those clouds because they thought they were going to get some return on it. Now, if all of a sudden you go, well, the return's not quite what I thought it was, could you see some moderation in spend? And so let me be completely clear on this, because I've put out written pieces on it. If you go back to the internet build out, which you could say started with the launch of Netscape Navigator at the end of '94, that continued for over 5 years. Cisco never had a down quarter sequential during a 6-year period of time. But the stock went down 26% in late 95, 38% or so in 97, and then another 37% or so in 98. And that was because revenues went ahead and started to slow down sequentially. They never declined, actually, but that was because you were going through some period of digestion over that big ramp up, and then the stock corrected. And so that's all I'm saying I think is going to happen, is that the rate of growth is going to slow down from the torrid rates we've seen, because you're going to have to look at, well, am I getting any return on investment? And we've had 4 very large software companies, which all, by the way, were touting the benefits of AI, cut the numbers.